Even as banks have moved towards digital, some are being held back by their legacy systems, which are a strain on both resources and their finances. Saurabh Verma, Financial Services Industry Lead Australia at Avanade, explains how they can further change to create greater cost savings. Hi Saurabh, thanks for joining us today.
Hi Kim, thanks for having me.
So costs within the banking sector can still be high as they hold on to outdated practices and legacy technology. What can they do to overhaul these processes and make cost savings?
Yeah, it's a really key question. I think we've seen since the financial crisis in 2008, many banks have invested in digitization and process automation. So there's unlikely to be tactical low-hanging fruits that they haven't already taken advantage of. I think this is a time where banks are looking into an environment that needs greater scale, greater resilience, and they need to do it at a lower cost. And I don't think there are easy answers. This is a time when they need to look at breaking the ball and chain from their legacy systems, address key areas that have been draining their budget, impacting their people and their productivity, and address risks around systems that are end of life or have complex processes, difficult to manage, complex to deploy changes to. So it's a time that we really do see simplification of IT, and in particular their IT estate becoming key. We've seen some real examples of banks taking some key steps. Some took some of these steps, perhaps just before the crisis, but in these times we've seen an acceleration, if anything, towards simplification. A couple of examples of that are National Australia Bank, who just a few months ago announced a program that they were moving 1,000 applications in 1,000 days to Microsoft Azure. The Commonwealth Bank of Australia has announced that they're going ahead with a tech simplification program. They've got 3,500 applications and they want to reduce that footprint by about a quarter. They're also moving to public cloud, shifting from 25% estate that they have at the moment to 95%. And they're doing that to drive lower cost to run force, lower cost of compute. But most importantly, they're doing it so that they can scale and have resilience in the systems.
And how could banks develop a different cost structure to make additional savings?
Yeah, the reality is we are seeing a significant shift towards a digital economy. We're seeing payments switch from cash to digital payments in a significant way. And that's increasing our reliance on banks, financial institutions, and in particular their IT systems that support this infrastructure. And we all know that revenue is under a lot of pressure with low credit growth and low interest rates. So the reality is we believe that they need a variable cost base, to simplify in areas that they can, to shift to essentially elastic areas within their own organizations, whether that's computer storage and data. And in particular, with that shift to digital economy, we're seeing the data estate and the data volumes really grow significantly during this time. So they need optimal ways of managing that. The other areas that we're seeing banks invest in is really looking at sort of their property program, and looking at how people work in the future and how might people collaborate in the type of spaces they might collaborate in. And that's shaping the future for what their office space might look like and sort of their existing headquarters, and is that really a model that they go forward with? Also, how they repurpose some of their branches, and then of course their data centers. And, with an increased shift to public cloud, how many banks continue to operate large data centers themselves?
And how could the introduction of new technology like AI contribute to reducing the everyday costs for banking?
Yeah, great question. I think, with that shift to digital economy we just talked about, we've seen a really large volume of data that's being accumulated by the large banks in particular. Now that has a couple of significant roles, we believe. One of them is AI and data has to play a key role in ensuring that through this process, risk and cybersecurity is really well managed. So what you don't want to do as a financial institution is introduce a new process to help manage a government incentive or a government relief, only to be opening yourself up to significant cyber risk or process or operational control risk. And so this is where we're seeing use of AI to really understand where there may be some anomalies, what might be some challenges in processes, and how might they address that differently in the future. Another example where we're seeing data and AI really shift the experience is using next best action and some of the digital tools that the banks have already rolled out to provide proactive nudges to their customers and really help them understand some of the benefits and offers that they might have. As one example, Commonwealth Bank of Australia, through their mobile app, have a feature called Benefits Finder. Now that's seen a 78% increase in uptake over the last 6 months. Now, Benefits Finder is a really simple application from a customer user experience perspective with a lot of data and intelligence at the back. And the idea there being that based on your usage, your income, and the situation you might find, with Benefits Finder, the bank is able to point their customers in areas of some of the benefits that they may be applicable for and take advantage of some of these government incentives, government reliefs, or perhaps even offers that organisations are offering. And we think that that's a great way of interacting, a great experience that they're offering, and it doesn't increase their call volumes to contact centres and things like that, because it's a really digital enabled touch point and it's a digitally enabled process. I think that's sort of one example. I think fundamentally though, they have to drive a greater shift towards those digital channels. And all banks have sort of faced against demographics for years who really haven't shifted towards digital. And this is a time to really support them. And I think one bank, one story I've come across that's a really great example of this is the Lloyds Banking Group. They're planning to equip 2,000 of their customers who are over the age of 70 with a tablet device to enable them from a digital experience perspective. But more importantly, they're actually working with a skills agency that are speaking to their customers, supporting them, educating them to connect in a digital way, not just with their families and friends, but with the bank, and allow them to engage in the financial ecosystem and do that in a secure, safe manner.
Thanks very much, Saurabh.